Another cause for investor concern, the 30-year bond trading at its all-time low, the 10-year yield at levels not seen since the Brexit unrest in the summer of 2016. So what do you make of this? Is there concern that the U.S. could see negative rates like those in Europe and Japan?
Oh, God, I hope not. I hope we don't get that far. Again, this is a concern, obviously, for insurance companies and banks. Banks obviously took a major hit today, but you got to put yourself in the position of insurance companies out there that need to keep a certain amount of their assets in securities like treasuries, and these yields are coming down. It's very, very hard for them to do well. It's going to make it difficult for people that actually go out and they buy annuity contracts. It's going to make them much more expensive over the years. I do think it's a bit obscene where it comes to interest rates. I'm not a big fan of this ultra low stuff out there. I don't think that is beneficial at all. But again, this is not Fed driven. They keep talking about the Fed all over the news. And I said, the Fed doesn't have to do a darn thing. The markets are driving the rates down all by themselves.
Well, Chris, the thinking is that the Fed may step in and inject some liquidity if things worsen. If this does, in fact, become a black swan event, that the Fed may follow the policy that we saw by the People's Bank of China, inject more liquidity. The question is, how much juice does the Fed have anyway, considering where we are with current interest rates? What tools would the Fed have to tackle a black swan event?
If we have a situation where it comes over here, obviously you want to flood. You want the banks to make sure that they have plenty of money out there so companies can keep going. I don't think we're anywhere near that situation like they have going on in China right now. We also have to remember that many of the companies in China are command and control. That the government's heavily involved in these businesses, and they've been shut down for over a month now, making many of these companies inefficient in the first place. I don't think we're even close to being in that situation. So again, you got to lower rates much more. People are not having a really difficult time going out, especially small businesses going out and getting access to capital. So I don't know if that's going to be the answer.
All right. How do you see the political developments playing in here? Sanders does seem to be leading the Democrats, at least so far. At what point does the Democratic race start to impact the way investors are looking at the equity markets?
Well, saw some of the health insurance companies after this past weekend. They took a major hit today based upon the fact that Bernie Sanders wins. He wants to limit all private health insurance here in the United States. We do have a system of government here, if your listeners are aware of, where it's got to get through Congress too. He's not going to be able to, wave a gavel and just go ahead and make that happen. I think we are a long way away from that here in the United States. But I think when it comes down to Super Tuesday, when we get to that point in time, then I think, you know what, people are going to start considering what might happen.
But as you say, at least there's Congress that could keep things in check. All right, Chris Markowski, thank you so much.
Thank you.